You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Let's find out together, shall we? It is time for TWIFO, the appropriately named This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsInsider.com, as well as from the network upon which all of you folks are sucking up my bandwidth. Don't worry. We got more behind that, so have at it out there. If you like what you hear, this show, anything else on the network, throw a like, a star, a comment. If indeed there is a sponsor on the show that has a product that you like, you want to kick the tires and light the fires and let them know that you like it, hey, more the merrier out there. That does help the sponsors know that they're reaching. You folks are hearing you out there, and it does help support the network at the end of the day. So that's probably, of all the things you could do, that's definitely up there. And then, of course, if you want to go above and beyond, you want to get more content like awesome two guests that have been on TWIFO quite a bit, going head-to-head in our Pro Q&A for the very first time ever. Carly Garner, Miss Nat Gass herself, and Dr. Vix, head-to-head, because you folks asked for it, 2-for-1 in a Pro Q&A session yesterday. That was pretty awesome, if I do say so myself. Never been done before on our network, and we did it for you pro folks over there. If you missed it, hey, don't worry, it's there for you right now. TheOptionsInsider.com/pro. You get access to that exclusive podcast feed. You're going to get volatility views. You're going to get options oddities after volatility views tomorrow. And then all sorts of other fun out there. 300 plus episodes waiting for you the second you hit that button. So what are you waiting for? TheOptionsInsider.com/pro is the place to go to learn more as we learn who's joining us on the old CME Group hot seat today. I am pleased to welcome back my old pal, Mr. Dan Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir.
Well, thank you very much, Mark. Great to be with you. I'm excited about looking at and exploring these markets with you today.
I missed you down at the big FIA Boca show last week, Dan. A no-show at the big futures event, huh?
Yeah, no, I didn't make it down there. Did you?
I did. It's kind of, you can get to catch up with everybody from all over the globe in one place, so it's kind of convenient for us.
It is. It's a terrific place to catch up with people. I like it as well, too. I feel the same way about the FIA Expo here in Chicago when they have that. It's a great place to meet literally people from around the world and to find out what's happening in their areas and what their exchanges are looking at. And it's terrific.
Let's find out what's going on in these markets, shall we, listeners? It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side, both from an underlying movement perspective as well as from a vol perspective over there at CME Group this week. On the underlying side, as you might imagine, more green than red on the screen this week. Looks like it's roughly 70-30 green over red, so definitely biased to the green, but not overwhelming. We can easily put together a bottom 10, maybe even a bottom 20 if we really scraped hard enough out there. But Mr. Dan, you are our guest. Where should we start this week, to the light side or to the dark side?
Let's start to the light side.
All right, to the light side we go. Number 5, listeners, off to the equities, in particular the sectors. It is the consumer discretionary sector, up 3.01%. So if you're wondering what parts of the S&P are moving and shaking this week, there you go. Consumer discretionary sector, up 3.01%. Number 4, right behind it, it is the E-mini Russell 2000. I should say really right above it, up 3.25%. Man, the Russell 2000, we could do a whole show just on that, it seems like, these days. But as we keep on going, keeping it in the equities, this time number 3, it is the industrial sector of the S&P, up 4.5%. So there you go. Equities certainly leading the charge this week. Number 2, though, above all the equities, going out to the rates, it is 3-month SOFR, up 4.67%. And then our number 1 light side mover, kind of interesting. This one's been on our radar a little bit now with all the action going on in Japan. It is, of course, the yen-denominated Nikkei, up 6.79%. Number 2 in the other direction last week, off 5.64%. Of course, Japan making headlines this week, raising rates for the first time in, I believe, 17 years. So historic action coming out of Japan, which maybe explains why our dark side number 5 is also going out to Japan right now. It's the yen USD, off 2.33%. So don't see FX creeping in there very often. Might have to sink our teeth into that one out there. Yen USD, number 5, listeners, off about 2.33%. So from the land of FX, we go to dairy, class 3 milk, number 4, off 2.95%. From dairy off to crypto we go. Number 3, it's Bitcoin, giving back a little over 4, about 4.09%. It was number 5 in the other direction last week, up 3.5%. We all know it hit well north of 70K last week before retreating a little bit right now. So a lot of action out there in the crypto land. Number 2, back to the ags. This time it is the oats, off 4.85%. And our number 1 dark side mover, which I do believe now can probably be said to have taken the crown from lumber. Lumber used to be one of our frequent offenders out there on the TWIFO report every week. It's pretty much quiet now, so you might have to put palladium in there. It's definitely rocking and rolling. It's number 1 to the dark side again this week, off 5.5%. And like lumber, also not really doing a heck, or even oats, not doing a heck of a lot of options papers. So it has a lot in common with that. All right, to the vol side now. Dan, same question for you. What do you want to talk about first? Vol gainers or vol losers this week, sir?
Let's do the gainers.
All right, because there isn't a lot of vol being added this week, quite frankly. It's kind of light. Kind of light. Like number 5, Dan, platinum. Is at a 23.94, up 0.03. That's all it takes to make it into the light side this week. So not a lot of names add in vol. A lot of vol coming off the top. Not surprising. It was a Fed week, listener. So that is pretty much an event for the market. Event risk usually comes off across the board when that happens. That's pretty much what we're seeing right now. Number 5, platinum. Number 4, it's our old friend, the yen USD, making it into both the vol and the underlying movers and shakers. I don't know. I might have to go out to Japan today, Dan. I am intrigued. We don't haven't talked about yen USD CVOL. It's at an 841, which is about 0.2 north of where it was this time last week. Again, just not a lot of vol to be had out there. Number 3, number 3 to the light side this week. It is soybeans, 1918 up 0.21. Again, not a lot of names add involved this week. Number 2, keeping in the ags, it's corn, 2411 up about 1/4 of a point. And the number 1 light side vol mover this week is soybean meal, up a whopping 0.87, trading right around 24.5 right now. And to the dark side, listeners, as you might imagine, I'm going to see if I could swap this up for a second, just because I know in the past we've had some confusion about the yield vol versus the actual price vol in rates. So I want to reorder this a little bit. Okay, that's a little bit better, because we had a lot of treasury yield vol in there. I know that's confusing to listeners sometimes if I'm quoting 10-year yield vol at like a 105 1/4 when they know the actual vol of the 10-year is nowhere near triple digits. I know that blows some people's minds out there this week. So let's reshuffle. There we go. It's something we discussed last week on the show with Rich Excel as well, trying to make the treasury vol a little bit more approachable for you folks. And doing it in terms of price volatility, I think makes a lot more sense for a lot of you. So that's what we're doing now. And then to the dark side we go. Number 5, we're kicking things off on the vol front in the livestock. It's lean hogs at about a 20.83, off about 1.1 points on the week. Coming in at number 4, it is WTI at a 28 and about 1/3, off about 1.12 points. So pretty close, neck and neck, 5 and 4. Number 3, it's going out 2 years on the SOFR curve, 122 and about 1/2 there, off about 3 3/4 points. Number 2, going out about 1 year on the SOFR curve, so it's a lot of SOFR in our dark side movers this week. 134 and about 2/3, off about 5 1/4 points. If you know anything about SOFR, things can get fairly juicy out there. And then the number 1 dark side vol mover this week, listeners, is the actual 3-month SOFR CVOL itself at almost a 64, 63.93, off about 9 1/3 vol points this week. So vol coming off across the board in rates. I know, Dan, we probably should touch on rates because it is a Fed week. We got 3-month SOFR on the vol movers and shakers as well as our light side movers and shakers. But I don't know, I kind of want to mix it up. I'm kind of intrigued about all things Japan in light of this yen USD action. What do you say we take a foray into FX first, sir?
That sounds good.
All right, to the realm of FX we go, listeners.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
I'm not going to lie, Dan. I want to do it as much just to play that drop. I don't think we get our money's worth out of that drop. We never play it because we never talk about FX on the show. So I want to get my money's worth for FX. But I wish we talked FX more. Just not really moving and shaking that often, unless again something historic happens, like Japan raising rates for the first time in 17 years, or Swiss franc blowing out everybody. Those kind of things get FX on the radar. Outside of that, not so much. You know where to go to run these reports for yourselves, listeners. CMEgroup.com/TWIFO, TWIFO, the place to go. Once you're there, you're going to go down the asset class to one. Again, you may be forgiven for forgetting about. We don't talk about that often. If it's foreign exchange, you're going to go down 5 slots to that. Then in the product family, FX majors. You might be thinking, okay, we're going to talk Euro USD. Nope, we're going to go all the way down to Yen USD. So that's almost near the bottom of that product category list. You might be surprised how much action there is out there, listeners. In fact, Yen USD putting up about 60,000 contracts this week, which is a pretty banger week for any FX product. A lot of you might assume, well, Euro USD leads the pack, and yeah, it usually does, but this week, Euro USD only putting up 45,000 contracts, so Yen USD eclipsing it out there. And again, I know some of these quotes sometimes throw our listeners for a loop. That front future at a 0.0066795 right now, to be precise. Off fractionally, about 1.85% on the week. Again, remember, you're quoting a currency pair, so that is indeed the differential. But I know for a lot of you, always fun to come to grips with that. But Dan, a lot going on in the world of all things yen, sir. What's catching your eye out there this week?
Well, yen has been incredibly interesting, and it started on the 19th. You mentioned the central bank there, the Bank of Japan, making an adjustment when it came to ending their negative interest rates. So it went from a negative 0.1% to zero is basically what they did. And they looked at it and said, we have a very robust increase in wages. They look at that from a broad point of view, and they increased people wages. They also had increasing inflation, too, along with that. But they said a few things that I think caught the market's attention. And that is they stopped yield curve control for the 10-year Japanese government bond. They've been doing that. They also stopped purchases of ETF and Japanese real estate investment trust, and they slowed down their purchasing of corporate bonds. So they forecast a change in attitude. It wasn't just that they changed the interest rate policies, but it's what they surrounded it with. And we have another factor that comes into play when it comes to our friend Mr. Yen, and that is the carry trade. Because interest rates were so low in Japan, a typical type trade is what's referred to as a carry trade. I deal with a number of institutions who have trading desks that focus on this concept. And the idea is it's a way to capture interest rate differentials between countries. So if we look at the cost to borrow Japanese yen, let's say for 3 months in Japan, which could be just a few basis points, and we go to Australia and we buy Aussie dollars, we put it in the bank, and we could make 4% on that money, and we don't have to do anything. We're just really parking it where I get a higher yield on that Aussie dollar investment. At the end of 90 days, well, then we take out those Aussie dollars, we convert them back to Japanese yen, we pay off that loan, and we keep that interest rate differential. That's the concept. But here's some things that you and I want to be sensitive to. Is the challenge when we go to take the Aussie dollar and convert it back to Japanese yen, if that differential, if that spread changes, so now it cost me more money to convert the Aussie dollars to Japanese yen, it could blow apart the whole thing. So what institutions do is they hedge themselves, or they actually may take this money out of the Aussie dollar and put it back to Japanese yen because of a change in the market's perception of the yen. So a part of that is a dynamic that we can see unfolding here. So that can put pressure on the downside or the upside if these are being put on in Japanese yen. So we have a change in the Bank of Japan's policy. We have a change in their interest rates. And we have a change for the perception of what could be happening with the Japanese yen going forward. I think all those pieces are what we're seeing at play. Now, if we look at the yen, over the last 6 days, it's been falling apart. It's been going down. And you're right, we are right now at levels, and we're approaching levels where if you look at it in terms of the number of yen per dollar, it's around 150. So 150 yen to $1. If we look at it in futures terms, now we're at that 67, 66, 78, down to around 66.50. What's interesting is today we're seeing it getting weaker. If we approach the 66.50 level, this is where in the past we've seen buyers coming back into that market. So how it approaches that level, and it's not far away from that. It's only about 28 ticks or 30 ticks from that level. If we get down there, pay attention to what it looks like. If you get down there and you're looking at candles and that range, you start seeing a little bit of buying coming in and it bounces back and forth, that would be typical behavior. And it could also be the setup for another rally in that market. We saw this whole type of thing unfolding back earlier part of March is where we saw that. And we could easily see that again. So it's taken a different position, I think, on the international stage. Its economy, depending on the numbers you're looking at, it has changed. It was always a number 3 economy in the world, U.S., China, and then Japan. But that role has changed a bit. Some of the numbers looks like Germany has replaced Japan in that regard. So we're seeing, I think, an international change in terms of the point of view of what's happening with Japan. And it's reflected in that currency. So it's a very interesting market, and I'm not surprised to see that float up there when it comes to the things that you look at, Mark, because of the price action that we've seen in that market.
Let's see what kind of action we are seeing out here in our favorite yen USD. Makes on the show, I'm going to guess, once every couple of years, if that. So let's enjoy it, listeners. Yen USD. Like we said, 60,000 contracts on the tape. About 31% of that going up in the April contract that has looks like about 15 days to go. It's not even going that far into April, expiring on the 5th. That future, like we said, at about a whopping 0.006668 for all of you who like your precise strikes out there. Now, the one knock against FX, one of the reasons why it doesn't make it on the show that often is because the vol fairly anemic at about a 7 2/3 right now, off about a third of a point. So that's actually a fairly big vol move out there, even though that's on that term structure. If you go out to the net CVOL, it was actually a bit of a gainer out here this week, which is kind of interesting. Again, reflects some of the methodology that goes into how that CVOL is calculated. This TWIFO report obviously goes back to the start of this week versus, obviously, the CVOL report. We set it back for a full week to the end of our show last week. So different frame of reference on those two here on the show. In terms of skew, got some action out here, actually. The puts last week were kind of flat to the at the money, so nobody really seemed to care one way or the other. This week, nearly 9% discounted. So again, starting from a low frame of reference, only 7 2/3%. So 9% discount. Take it with a bit of a grain of salt, but percentage-wise, it's still significant. The calls last week, 4.3% bid. This week, 11.3% bid. So the calls catching 7 points to the upside. The puts dipping nearly 9 points. So got some skew movement out here. And what is driving all this action? What's driving all this skew tizzy out here this week? It is the 6825 calls going up 7,400 times this week. 3,751 on Tuesday, mostly opening. Looks like a bit of a roll from the 0.007 calls to those. They were closing on the 07s and then doing more on the 6825. So usually indicative of a bit of what we call a house money roll, a roll that would actually be a winner because you got more money burning a hole in your pocket. Either way, it looks like they're probably taking that off today because about 3,500 going up today against OI of just 3,800. So they put them on Tuesday, and they're getting the heck out of Dodge. It seems like now, unless they're adding the exact same amount of size today, which is possible, but probably not likely. No other trades going up really today. So it seems like they put it on. They maybe did their roll on Tuesday, getting the heck out of Dodge today, and that accounts for nearly 10,000 contracts just in that one pretty much trade. So that's why yen USD looking a little robust. Behind it, like we said, about 3,000 of the 0.007 calls. Again, most of that coming on Tuesday, 2,100 on that pretty sizable roll. Worth noting about 750 going up by themselves opening on Monday as well. And there are about 6,600 actually still open as of today. So even taking 2,100 off the top on Tuesday, still a decent amount open on that strike, which makes some sense. It's a kind of a round psychological level. Makes some sense. We'd see some paper aggregating around that strike level. And then right behind it, in terms of action, we have the 665 puts going out in about 6 days here. So there is some near-dated action going up here in yen USD. That contract, by the way, that expiration cycle doing about only 7% of the paper this week. So not a very active one outside of these 0.00665 puts going up on Wednesday. It was all on Wednesday. 2,100 times, 2,150 actually. And they only traded a total about 2,166 this week. A whopping goose egg today. So all opening on Wednesday out here for those puts. So interesting stuff out there. That's kind of, looks like that's kind of it for the size prints out here. Actually, no, I take it back. We did miss one out here. Let's go all the way out to May. That's about 43 days, so it's not all nearer dated stuff, listeners. It can go out a little bit in time, too. And we got a little bit of call action out there. It's the 6-8 calls expiring, like we said, in about 43 days, going up 3,200 times this week. Looks like pretty active throughout the week. About 1,700 on Monday, mostly opening there. Almost 1,000 yesterday, and then a few hundred each other day, so a total of about 3,200 on the week. Worth noting about 1,300 of the 0.0069 calls also going up on Monday. Similar size and also the 7-1. So doesn't line up 6-8, 6-9, 7-1. I mean, it would be almost 1-to-1. They did it about 1,300 times on the 6-9s and 7-1s and about 1,600 times on the 6-8. So it doesn't really line up like a fly or anything like that. It might just be a straight stupid. We were talking about ladders with Carly yesterday. Maybe it could be a bit of a ladder out there, even though that's pretty tight strikes. But again, you see some tight stuff going up in these FX products. Worth noting also about 1,500 of the 655 puts going up, with most of that paper, 1,000 of them opening going up on Tuesday, about 500 on Wednesday out there. So kind of a smattering of paper out here. I don't know, Dan, it's just kind of fun to sink our teeth into the yen. Really quickly before we roll out of Japanese territory. I know it's not really an FX, it's more of an equity, obviously, but it is yen denominated. So Nikkei also making it onto our list this week. Our number one light side mover, up 6.8%. Not a huge volume story there from an options perspective. It's probably not going to sink our teeth into it on a separate category. It might be worth spending some time on it now, Dan. What are your thoughts on everything going on, not just in the yen, but also in the Nikkei, sir?
Well, the thing about it is, from a psychological point of view, the market really has shifted. The expectations are a lot higher. Excuse me. See, it just chokes me up thinking about it.
You get emotional talking yen and Nikkei, sir.
Yeah. But I have some contact with some people in Japan, and the point of view of what the Nikkei is doing, it's not surprising, because this shift that we're seeing with the Bank of Japan, like you mentioned, 17 years since they've done something, is significant in that marketplace. If I remember being in Japan in the late 80s, actually, 89, and before their market fell out of bed. And when it did, when I was there, the amount of money was incredible. It was also at a time when everybody here in the United States was saying, oh my gosh, Japan's buying everything up. They're buying farms. They bought, what was the country club out in California that they purchased? I can't remember the club. And it was like, unbelievable. They have all this cash. They're buying everything. And then, the lights got turned out. And what's amazing, it's not that the market came down. That wasn't the issue. The issue was the recovery. Its ability to maintain momentum to come right back up, which is usually what you expect. It was a very robust economy in that regard. It was an international player, but we never saw that kind of recovery in Japan. So it's been this bottoming kind of market. So when they see a little bit of light when it came to the Bank of Japan, really stimulate a lot of people. Another characteristic of Japan, which is different than our society, our society, we're spenders. We spend a lot of money. We're not savers. If you look at Japan, they're savers. Their 5-6 times saving rate is higher. Talking about just general people saving money is much higher than it is in the United States. And maybe a part of what we're seeing because of this change of perception about the Bank of Japan, and for the Bank of Japan to do something, well, what does that say about the economy? What does that say about their outlook? And whenever a central bank does something, it says, well, if they're willing to do that, maybe our economy is not too bad. Maybe things are really going to start turning around. And so we're seeing capital loosening up going into the Nikkei. So I think that movement is not too surprising. And Mark, it's what we see here when it comes to central bank intervention or central bank policy, is that here now, when we see what the Fed has just done, what does that say about our economy? What does it say about the Fed's confidence in where our economy is? If they're willing to hold interest rates unchanged, if they're willing to say, something before the end of the year, we could lower interest rates 3 times. So it sets in motion a psychological impact, I think, in the marketplace. And it's a part of what you and I are seeing reflected in our friend, Mr. Yen.
It's funny you bring back the Japan panic of the late 80s. You're right. They bought Pebble Beach. Everyone freaked out. There were movies like Gung Ho, all about Japan buying up America. It was the Japan panic. It seems kind of dated now in hindsight. Those fears have been focused elsewhere, but intriguing stuff nonetheless. Speaking of intriguing stuff, Dan, what else is floating your boat this week? What other intriguing products should we bring onto the show this week?
Well, do you want to stay? We did currencies, would you say?
I think we did, unless there's something else really lighting up your tape out there.
No, I think let's take a look. How about energy?
All right.
Shall we take a look at crude or nat gas?
WTI certainly making it onto our vol movers and shakers this week. Number 4, actually. To the dark side. All right, to the world of energy, we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, go into that energy drop down. You know where to find it by now. It seems like we touch on it most weeks. Usually hit on nat gas. We don't have, actually, a rare week where nat gas is not represented in either our vol or underlying movers and shakers. So for all of you writing in saying, what's up with the nat gas? There you go. Not making it on our list this week, but WTI is. I think we're going to head out there this week. Kind of mix it up. It is kind of funny. For a long time, WTI was the most frequent of offenders, and these days it seems like it's kind of fewer and farther between than its energy sibling / rival, nat gas. WTI getting a little bit of juice back this week, almost at an 80.96 to be precise. In that front future as we're kicking off the show. Up about 1/3 of a handle, about 0.5% on the week. So not a huge move, but again, something for all you WTI bulls out there. Like we said, also number 4 on our vol movers and shakers this week, with vol coming off a little over a point, about 1.12 points out there. Dan, obviously a lot going on in the world of WTI these days. Seems like it's in the headlines all the time. What's catching your eye out there in the land of crude?
Well, it surprises me where it is first. And let's think about some of the drivers when it comes to crude. One, our consumption patterns here in the United States, the amount of inventory we have in the United States, and there's been a drawdown on our inventory when it comes to crude. Where does it fit in terms of the international side? There we can think about the tensions that we're continuing seeing in the Ukraine area with the Russian invasion. That changes or adds to the mix. We also have production cuts by Saudi Arabia and OPEC. that can have an impact on the market, but we're not really seeing that causing a great big impact, even though they've cut production. And if you look at some of our exports, not only are we selling some crude to Europe, but we're also selling it to China, Japan, and other countries. What's also interesting about crude oil is we want to think about what's happened. You know, when Russia first invaded Ukraine, energy went nutso because people are saying, where is Europe going to get their energy? Look at our friends in Germany. Those pipelines are the main pipeline. They had one going to Ukraine. They had the Nord pipeline, which is a direct connection from Russia to Germany. And then they had one that they had just completed, which never really got turned on. So now what's going to happen? Well, what's interesting is how the energy balance globally has changed. Is Russia still selling crude oil? Yes. And their biggest customers are China and India. I mean, if you're India and somebody comes to you and says, you know something, I will sell you crude oil $30 off of the market cheaper. I'll give you a discount. And you think about their economy, they got to do something. What's also interesting, not that of the shift in outlets for crude oil, in that regard, it also has an impact on how they rubber stamp crude oil. In other words, if Russia sells crude oil to Kazakhstan, we can buy crude oil from Kazakhstan. It's not banned.
Right in the middle of all things TWIFO. There one more time for Mr. Dan Gramza.
Better?
Ah, there he is.
All right.
We lost you about 2/3 of the way through your analysis of crude oil. I don't have the exact spot, sir. So if you can in your head.
I think what I got to make sure I pay those bills.
I'll say the Skype bill going unpaid, internet bill unpaid, sir.
I guess so. Well, the issue with this idea of crude oil and where it fits in and how it fits in globally, I think it is important to keep in mind. You know, when a country says to another country, you're banned, we're not going to buy your product anymore. That could be in terms of the direct connection, but it doesn't mean that transaction doesn't occur in some form. As I was starting to mention, China has done that with steel. You know, we put tariffs on steel, which almost all presidencies have done. Since Reagan, actually. But anyways, we put tariffs on steel. We're not going to buy your steel. But if China sells the steel to Vietnam and Vietnam looks at it and goes, wow, that's steel, they put their stamp on it, we could buy steel from Vietnam. So are we buying Vietnamese steel? Well, that's where the whole debate of how countries get around controls that are trying to be put in place. So the energy market, the point is, it's shifted. It has really changed. And if we think about one other area that has really changed, it's not the price, it's the transactional currency of the trade. Crude oil is traded in dollars. China, Russia, they say, doggone it, I don't want to trade in dollars anymore because the United States has the ability to touch that. So, you know, let's stop using the dollar as the focal point. And we see that. We see it where countries are now willing to make transactions in rubles. India is willing to make a transaction in non-dollars, for example, with Russia. We're seeing it in terms of gold. Central banks are purchasing a lot of gold. Why do they want gold? It doesn't back any currency. Last currency backed by gold was the Swissy, and that ended in 1999. But if I have gold reserves, I can make a transaction. I can convert that gold into another currency to make a transaction. I could do gold to gold transaction, and I am avoiding the US dollar. So I think all those things are at play. Right now, today, if we talk about what's happening, US dollar is very strong. We were talking about the yen a few minutes ago. It's getting weaker. And so are a lot of other currencies today. The US dollar is rallying. As US dollars go up, it's one of the factors that you'll see reflected in crude oil prices. So as the dollar gets stronger, crude oil prices in general can have a tendency to go down. The reason for that is if I am a crude oil producer, I get paid in US dollars. I go to my bank, I take those US dollars, and I say, please give me our local currency. If the US dollar is strong compared to my currency, that means I get more of my currency. So that's good. So crude oil pressure on crude oil prices can come off a little bit. On the other hand, if the US dollar is weaker, which is what it's not today, then I get less of my currency when I go to make that transaction, that change, that conversion. So it's another factor, I think, when you and I look at crude oil. Crude oil fundamentally, I think, is about where it should be. I don't see any fundamental reason for a dramatic rally. $80 a barrel, I think, is a fair price for crude oil right now. And for it to go sideways on Friday as we go into the end of the week, I wouldn't be surprised to see that. So right now, our production on target. Inventory, dramatic issues, not really. U.S. dollar stronger right now. And the global tensions that we see, that really hasn't changed any, even though we have those production cuts. If you look at those countries, if you look at OPEC, they'd like to see crude oil around $100 a barrel, because then they can balance their budgets. A lot of them are satisfied right here, $70 to $80 a barrel. So I think, even though the bias for crude oil longer term is higher prices, I'm looking at a sideways move. One last thought. Think about crude oil when we go to fill up our gasoline that used to fill up our car. If that goes up, that means I have less money to spend if gasoline prices are higher. And that can be a contributing factor to inflation. So if we think about the Fed and they say we look at the data, and if we see a huge increase in crude oil prices, it has an impact on our having extra money to spend. And remember, consumer spending, 70% of our GDP. And at some price level, it will have an impact on profitability of companies because it eats more into their profitability as their energy cost goes up. So there's a magic balance, I think, going on here. But right now, I think crude oil is really positioned to be a sideways market.
Let's see what's positioning out there in the options. Dan, as you were talking, I was just going through the block trades to see if I could find what was up with these, because it seems like, Dan, out here right now this week, we have about 450,000 contracts on the tape, so kind of an average week volume-wise for crude, and of that, about 39% going up in the May contract has about 27 days to go. So we're going to hang out there. By the way, that front crude, like we said, ticking towards 81, about 80, 96 in that front future right now. The vol, like we said, coming off out here in crude oil this week. Our CVOL was number 4 on the dark side vol movers, and that is being reflected out here as well, with this May contract actually coming in about 2 points, 24.60 coming in exactly 2 points. Skew-wise, the puts last week, 3.6% bid. This week, catching a little bit more of a bid, almost 5%, 4.9% bid. The calls kind of unched 0.5% cheap last week, 1.7% cheap this week. So getting a little bit cheaper, but nothing crazy out there in terms of skew, really in either direction. But what caught my eye, Dan, here was the biggest, most active contract of the week were the 90 calls in May. And that kind of struck me as interesting. Usually we see, a little bit longer term upside stuff going up. May 90s, kind of interesting. So I went digging into the blocks to see what we could see, because again, almost 13,000 of these trading this week. The big day was actually Tuesday, 4,700, slightly closing there. About 4,000 again today. Don't know obviously what today's paper was, against OI of nearly 14,000. 2,300 on Wednesday, opening there, and about 1,500 on Monday, opening there. Again, if we look at the skew, we can maybe read in there's a little bit of slight overriding there, but the skew didn't evolve that much there. I don't know, Dan, May 90s, I don't have prices here, but you a buyer or a seller of that strike in general, sir? Sounds like, given what you just said, probably a seller?
Yeah, I would be interested in selling that to take some premium and maybe do some other transactions. Let it pay for another trade we might want to do at some lower strikes. Yeah, I think that's a little bit rich, but it goes back to perception on this market too. It's not so much a supply issue now, but it's really that perception of the future. And I don't see a 90 print out there. And plus what you said there, we don't really see like verticals or something going on where people are selling some premium to finance some other trades. So it's a very interesting insight into the market.
Yeah, only vertical I really saw going up for size in the blocks was the 80-85 calls vertical, going up for I think paper selling that, which is interesting, for I think $2 and change out there. So that was kind of interesting. But yeah, not being reflected here in this May paper bonanza, because right behind it we had the 85s going up about 9,200 times this week. Seems like some of this paper was rolling up to the 90s this week, which is interesting. Early time to be rolling from the 85s to the 90s. But then again, I guess you got a little bit of your upside move this week. So yeah, we had about 3,200 going up on Monday, closing there, 2,500 on Tuesday, 2,300 yesterday, which also lines up almost exactly with the 2,310 of the 90 calls that traded that same day, opening on the 90s, closing on the 85. So one of those where it seems like there was some upside roll in paper going up out there, and about 1,000 today going up out there. So a total of 9,000 on the 85s. Again, we're at about an 80, 96, almost 81. Listeners, you want to go out and roll your 85s now? I don't know, maybe. You don't have, let's see, you have about 27 days to go. So you got a little bit more room to run. You can certainly let those 85s breathe. Or maybe you just take them off if you are indeed feeling this potentially optimistic. Either way, intriguing stuff. Could be rolling the call sale, obviously, too. Someone was obviously selling the 80-85 vertical this week. So it could be potentially rolling the sale of the 85 up to the 90, in which case maybe you're getting a little bit spooked out there. Intriguing stuff. All right, behind it, the 90s also trading about 7,000 times this week, almost exactly out in June. So that 90 strike, Dan, the strike of the week out here in crude oil. Interesting. I would not have guessed that if you had put a gun to my head, sir. 90 strike. 7,000 of those going up this week, almost 4,000 today against OI of about 20,000. So it could be some folks taking some off the top there. 1,200 each Tuesday and Wednesday, and about 700 on Monday out there. Also worth noting, and this is the kind of paper we know and love out here in WTI, a little bit longer term upside action in the DEES contract. That's what we've come to expect, Dan. There's a couple of products, gold and usually WTI, the two that we could usually reasonably expect a decent amount of upside action. And that is the case again this week. By the way, obviously, that DEES future actually looking lighter, 76.70 out there. So these 110 calls look even more grandiose in retrospect there. The 110 calls going up 8,000 times this week, 4,300 times yesterday, 3,800 today, a total of about 8,100. That's against OI of about 28,000, so probably opening both days. Worth noting, they were also opening about 2,000 of the pars, the 100s as well, about 2,500 times of yesterday and about 1,900 times today. So opening vertical, I don't see much against it unless you want to talk about closing 1,300 of the 95s yesterday. They could have been closing those. And then, I guess, suppose rolling to a par 110. Again, that future's at about a 76, so you're talking pretty far out there, but we have seen more outlandish upside in WTI in the past. So there's some of the weird prints and trades that are coming across our radar out here, listeners. Looking really quickly if you see any crazy put prints. Not a ton, unless you're really excited about the 70 puts going up about 5,000 times in July. That's kind of about it. So not a lot going on out there. Dan, we're kind of coming up against us. Let's squeeze in really quickly a little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to some of your feedback on some of the questions we've been putting to you folks of late. First off, a fun one last week, and again, one we've never really asked you before, which is kind of fascinating in and of itself. How many options positions do you normally have open in your trading account? 1 to 5, 6 to 10, 11 to 15, or north of 15, and 1 to 5 taking it nearly 61%, followed by almost 20% for 6 to 10, almost 15% for north of 15, and about 5% for 11 to 15. Dan, does that breakdown surprise you? Is that pretty much what you expected, the lion's share of the audience having 1 to 5 options positions in their account at any given day?
If you look at the marketplace in general, why are people trading options? And they're trading it to either get some exposure or to leverage an opinion or to collect some premium. Income source.
That is the case out there, which actually dovetails nicely into our question of the week this week, Dan, which is, what is your primary reason for trading options out there? As Dan mentioned, income, premium harvesting, protection, or hedging, speculation, or other. Dan, as you mentioned, a lot of people coming in for a little bit of the old premium harvesting. Is that your choice? Is that your trade? You think our audience that's their number one reason why they're trading options, or you think something else? And also, for your use case, what do you think is your most common use case for options?
I would say premium harvesting. I think options are a wonderful tool to use as a source of income. But I guess when I'm thinking about it, I don't know how comfortable or how experienced people are in terms of selling premium. And if they're not, they shouldn't do it. But I think it's a great way to provide an income stream, and or to hedge. It's another way to get protection. So if you have a position you're concerned about prices changing, options give us that flexibility. Speculation, I do have some trade setups. It's the same thing for selling. I guess what it is, Mark, I look at it from a technical point of view, and if I have something that's very bearish, I'm happy to sell premium against that. But what I always put on top of that is time. So whether I'm speculating or trying to harvest some premium, if that trade doesn't work, typically within 5 days, I give it the big adios and stand aside. Because what I was looking for was specific price behavior. So if I'm going to speculate, I have no problem buying an option, but that's got to perform. I want to get paid for the trade. If it goes beyond that, then I shift to a hope trade. Well, and I really bugs me or bothers me when I hear someone say that option only cost me $500. And what goes through my mind is the person is saying, well, I'm going to make a $500 donation to the market. I have a trade that's not performing. I'm, in the prayer phase, hoping it starts to work for me. And I from a trading point of view, that's incredibly uncomfortable for me. So whether we speculate or trying to gain income, I think the time factor of giving it enough time to work, but usually that sweet spot, that 5 days. And just one thought is, if you look at a trade of why you're putting it on, and you say, well, because I think it's going to do this, look at the previous trades that you would have said, that's a good trade. All right. It's a clean trade. How long did it take from that point to where it started to work? And it's probably going to be within about 5 periods of time. So I guess that's the way I feel about that. I'm happy to do either one, speculate or sell some premium.
Let's see what our audience has on the brain, Mr. Dan. And once again, you have your fingers on the pulse of our audience, sir. 54.2% going for the old income or premium harvesting. Seems like it's ticking down. That was north of 60% earlier in the week. So we got some more speculators coming in, Dan. 39.6% going for the speculative route, which again, a lot of people trading 0 day. That is not but speculation, right? So I can certainly see why that's so high. Protection, Dan, only 6.3%. Only 6% coming in to hedge, buy some puts. So that's kind of interesting. And then 0% for other. If you have an other, hit us up. Let us know. We want to hear from you folks. Unfortunately, that music means we have come to the end of another sojourn through the world of futures options. Dan, did you like our foray to Japan this week with a little stop for crude oil, sir?
Yes, I did, Mark. I didn't expect us to talk about those, actually. I enjoyed it very much.
That's why you have to tune into the show, or in your case, come on the show every week, Dan, because you never know what the heck we're going to talk about on the show. That's what makes it fun.
It's true.
Our biannual check-in on all things FX. Hope you enjoyed it. That's it for, or maybe Rich Excel comes on sometimes. He's an FX guy too. Sometimes he squeezes a little FX onto the show. But outside of those two scenarios, unfortunately, not a lot of FX making it on the show each week. But Mr. Dan, if folks want to reach out to you to talk FX or anything else, where should they go? What should they do?
Well, they could go to a website, dangramza.com. I do a daily video. It's watched in over 150 countries to my total amazement.
Huge in Japan. I hear you're huge in Japan, sir. Some might say you're our man in Japan.
I don't know about that. I know a few people there, but I'm not sure about that. But there's a free video, and you can go back 10 years to see what was I saying, 2 months ago when that happened. And you'll see red and green lines, which represent buy and sell levels. These are not buy and sell recommendations, but just ideas that I want to share. If you're not familiar with futures, one place to begin is just watch them. And this is a way to maybe get more comfortable and find out that maybe some of these futures markets, and I look at 22 different markets, that aren't as crazy as a lot of people think. So the volatility may really provide some opportunity, but not a lot more necessarily than we experience in the equity market. So anyways, and you can go back 10 years if you want to see what was I saying previously.
I'm just looking, Dan. We're huge in Japan. I'm looking at our numbers in Japan, and more listeners in Japan than mainland China. Interestingly enough, we do have a fair number of listeners coming in from Asia, and it looks like the lion's share are coming in from Japan. But intriguing stuff out there, Mr. Dan.
It is.
Of course, Australia, if you count that in Asia, blowing the doors off all of them. Obviously,
that's
less of a language barrier there than there is with Japan out there. But listeners, check them out over there. Dan Gramza, GRAMZA.com is the place to go. You know where to go to get all these reports we're talking about on the show. CMEGroup.com. TWIFO for the TWIFO reports. And if you want to kick the tires on some of the CVOL for yourselves, just type in CME and CVOL. That'll take you right to the page, and you can play around with all of this stuff we're talking about here. I'm not sure if I'll have to go check and see if you can order them the way we do on the show for our movers and shakers, but that could help you, obviously. And also make sure if you're looking at the Treasury vol, make sure you select it in terms of price volatility rather than yield. Probably be a little bit easier for a lot of you to sink your teeth into on those levels. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, for a little bit of vol action. Who's going to talk vol with us tomorrow? Got to tune in to find out. After that, back one more time, exclusively for all you pro cats and kittens with some options oddities. What were the crazy trades? Lighten up our tape out there this week. Well, got to tune into options oddities to find out, listeners. You can find that for yourselves. TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again next Monday with the option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.